Okay, looks like everyone can hear okay, so we're going to go ahead and get started with today's webcast. Again, I'd like to say welcome and thank you for joining us today for a presentation by our guest speaker, Jill Dymtrow with Compliance Technologies International. Also joining us today is Jeff Cronin, Vice President of Product Strategy at Convey. And I am Lauren Skinner-Johnson, and I will be moderating today's event. A couple of quick housekeeping items before we get started. Everyone will be on mute for the duration of the event, so if you have a question, feel free to type it into the chat window or the Q&A window that's also in that panel in the right-hand side of your screen. And then we will do some reviewing of the questions towards the end of today's event. By attending today's webinar and participating, you will be eligible for 1 CPE credit. This is an overview course with no prerequisites, and it requires no advanced participation. Per NASBA requirements, in order to receive that CPE credit for today's event, we need you to answer 2 out of the 3 polling questions correctly. And then at the end of today's event, you'll be getting a survey, and we need you to fill out that survey as well to get the CPE credits. Also, I wanted to remind you to register for Convey's annual Tax and Regulatory Conference. The 2012 C2 Summit is going to be at the Omni Dallas Hotel in Dallas, Texas, and it starts on Sunday, September 23rd, and goes through Tuesday, September 25th. The C2 Summit is a live tax information reporting seminar that includes a half day on Sunday of Convey solution training and 2 full days of regulatory and compliance sessions. And now I'd like to introduce Jill Dymtrow. Jill is a Vice President at Compliance Technologies International. She joined CTI in 2007 as it was being established by partners in the law firm of Burt, Staples, and Maynor. She has 11 years of experience working with U.S. financial institutions, multinational corporations, and qualified intermediaries, managing their day-to-day compliance obligations under the IRS Section 1441 and 3406 rules. Prior to joining CTI, Ms. Dymtrow specialized in information reporting and withholding as a manager with PricewaterhouseCoopers. Her work has involved large global financial institutions, as well as technology, energy, pharmaceutical, and biotech companies. And with that, I'd like to welcome Jill.
Thanks, Lauren. All right, so thank you guys for participating in today's webinar. Today we're going to focus on reporting income to foreign payees. So if you have any familiarity with this topic, you've heard of the Forms 1042-S and 1042. So today we're going to go over a little bit about how things have changed for these forms and just some of the basic rules that apply to the forms and the process as you do make payments to foreign payees. So I get a lot of questions usually about this type of reporting towards the end of the year in the spring, but I think summertime's a good time to kind of get some sort of like mid-year refresher on this. So again, it's an important topic at any point in the year. So to introduce the Form 1042-S, the 1042-S is an information return report that is issued only to non-U.S. persons. So you might hear the term NRA. NRA means non-resident alien. It means anybody that's not a U.S. person. Now, income that's reportable to U.S. persons on Forms 1099 or W-2G would be reportable to the foreign payees on the Form 1042-S. So it's kind of the equivalent form for foreign persons as we would consider reporting payments to U.S. persons on 1099s or W-2Gs. A U.S. withholding agent, anybody that's making a payment to these payees, is required to issue a Form 1042-S when any payment of U.S. source FATCA income is made to an NRA. So there we have another tax term of art, FATCA. FATCA means fixed, determinable, annual, or periodic, and that's kind of the definition in the regulations of the income that 1441 covers. So I'll be covering more specifics about that term in a later slide. So Forms 1042-S are required to be issued even if tax is not required to be withheld. There's a lot of rules that you must consider when you make payments to foreign people, and certain amounts that are reportable may not be required to be withheld if you've got the proper documentation. So even if you don't do any withholding, the form is still required to be, the income paid to the person is still required to be reported on the Form 1042-S. Now, there was a conference about maybe 2 summers ago, literally, where the IRS announced that they now have a system in place to automatically review Forms 1042-S that they receive. So there's kind of a checks and balances that they would review, and making sure that, you know, these boxes are completed, and if you've got this type of income, that you have, you know, provided a TIN in order to have a reduced rate of withholding and things like that. So apparently a couple years ago they put the system into place where they could automatically review the paper and electronic submissions that they've received from on Forms 1042-S. Now, ever since that happened, I think, like I said, I think it was in 2010, I have been watching the mail religiously to see what kind of notices we're getting from Forms 1042-S that are filed, because we do a lot of 1042-S reporting, and surely if this was going on, there would be some things that the IRS had programmed in their system either erroneously that would be producing notices, or they programmed in their system that we just weren't on our radar, so we'd be getting notices and it'd be a big learning process. Well, we haven't been getting those notices, so either the reporting we're doing is all perfect, or the IRS hadn't put the system into place just yet, or they're kind of doing it a bit by bit each year, so all the forms will be reviewed ultimately 4 years down the road or something. But every year I still have to preach the sermon that this is coming. If you have issues on the face of your Forms 1042-S, it's not going to take an IRS audit to discover them. The IRS is going to be able to identify them automatically. So I'm going to keep preaching that, and maybe I'm Chicken Little and the sky is falling, but I have some amount of confidence that eventually that's true. So if you've been doing 1042-S reporting for years and you're comfortable that everything's right, it's still a good idea to make sure on an annual basis that not only are you making accommodations for the new rules that are in place, but that you are following the rules that have been in place that the IRS might not have been sending notices about in the past. So it's really important to make sure that you're getting these things right, especially with new legislation that's been occurring. They're only going to get more attention paid to these forms, and they'll be a bigger audit target in the future than they are even now. So just a little incentive to make sure that whatever you're doing on those forms, you're paying close attention to. So what kind of income is reported on Forms 1042-S? Essentially, it's payments for compensation, royalties, rents, director's fees, interest on accounts payable even. That's a big one that a lot of people disregard. Prizes, awards, scholarships, and grants. So those are the things that kind of make up FATCA income. And essentially, it really is any type of U.S. source income that's not that's earned. Anything that's not buying pencils from a producer in China. Goods are not included, payments for goods are not included, but always services, royalties, rents, interest, prizes, awards, all of that good stuff. So the standard tax withholding rate for foreign persons is 30% unless an exemption applies or a valid treaty claim is made. So whenever you're making a payment to a foreign person, the rule is you better be withholding 30% from that payment. Now there's ways to get out of that 30% withholding, whether you're applying an exception or you're applying a treaty claim. And in order to do either of those, you're going to have to make sure you're documenting either the payment to confirm that it is foreign source income, so not reportable to a foreign person on a Form 1042-S, or that the payee has completed a valid tax form and they've claimed a treaty, and that you can reduce the amount of withholding to 0% or a lower rate other than 30%. Now, a note on gambling winnings, they're also subject to 30% on gross proceeds with certain exceptions. So there's a
it looks like we lost Jill's phone line, so give us just 1 second and we're going to get her right back on the line. Thank you.
Hi, Lauren. I think I'm back on now. Can you hear me?
We gotcha, yep.
Sorry about that. I'm not sure what happened, but I will continue.
No problem.
I believe I dropped off at gambling winnings. So the non-business gambling income from blackjack, baccarat, craps, roulette, and big six wheel is actually not reportable on Forms 1042-S, and no withholding is required. But you do want to be really careful when you're making those types of payments because a Form W-2G reporting is required when those payments are made to U.S. persons. So you still want to get a tax form, a tax certification on a Form W-8 then from people that you're paying these winnings to, foreign people that you're paying these winnings to, so you can substantiate that you don't have to report them on a W-2G. There's also some treaty rates that would apply to withholding on gambling winnings. But again, in order to take advantage of those treaties, you'd need a Form W-8 with a U.S. taxpayer ID number and a valid treaty claim listed on that form. So throughout the presentation, I'll note that there are certain types of income that are required to have a U.S. taxpayer ID number in order to make a treaty claim, and there are some exceptions to that rule as well. So I will note that it's later on in the presentation. So it's also really important to know what you're paying, and you must make that determination before you actually make the payment, because it could have a lot to do with whether or not you're withholding, what kind of treaty rate would be applied, whether the payee's treaty claim is valid for the type of income that you're paid. I always get a lot of questions around December, January, and February when people are kind of putting together their Form 1042-S reporting to say things like, well, hey, I made this payment, but I wasn't totally sure what it was, so I just didn't withhold, but I think it might be royalties. It's really important to know as early as you can the type of payment that you're going to make. And I know in certain situations, like vendor payments, that can be really difficult to determine because you might have some U.S. source income going to them. You might have some non-U.S. source income going to them. You might have provisions in the contract that mean they might get royalties down the road or not. So it's always important to establish at the earliest point possible to know what kind of payment you're making to them in order to, first of all, capture the income code for your Form 1042-S reporting, and then second of all, even more importantly, to make sure you're applying treaty rates that actually exist for the true type of income that you're paying. The bigger issue here, rather than a reporting error, is an under withholding exposure. All right, so the next thing you want to make sure of is know who you're paying, because first of all, for 1042-S reporting purposes, you're going to need to apply the correct recipient code to the payment that you are reporting. And so you're going to identify that from the name on the tax form that you get. The name of the beneficial owner is going to have to go on line 13A of a Form 1042-S, and this can actually get complicated if you're ever making payments to a beneficial owner that is not actually the tax owner of the income that's being paid. So if you're making a payment to a partnership or a simple or grantor trust, you should be getting the Form W-8 IMY from the partnership itself and underlying the appropriate tax certifications from each underlying owner, whether they be Forms W-8 then or W-9. So that you can make the determination of who really is the tax beneficial owner of the payment, and to make sure that you're applying the correct treaty rates or the correct rates of withholding if a treaty doesn't apply. So not only do you have to make those evaluations from your payees, you have to report the information on a per underlying owner basis on Forms 1042-S. So we see a lot of times in vendor payment situations where there's maybe a partnership that's getting paid and there's a lot of underlying owners, and instead of trying to have each of them claim a treaty benefit specifically and issue all the forms for the underlying owners to the withholding agent and allocations that the payment should be allocated to, a lot of people just give the W-8 IMY and say, hold 30%. In financial services, those are a little bit different, where we do end up seeing a lot of the underlying owner documentation, and we do a lot more sub-accounting to make sure that the correct names get on the Forms 1042-S and that you've got the correct withholding amounts for each of those underlying owners. Now, if you do just get an IMY from a foreign partnership or trust and it says, hey, I'm foreign, but I'm just not going to bother giving you all the other underlying owners, just withhold at the maximum, you would report the payee as unknown recipient, and then you're going to report the intermediary's name in lines 17 through 20 of the Form 1042-S. Okay, documentation is probably one of the most important issues when paying foreign persons, and we could talk a lot about this, but that is really a topic for another day because it could take well longer than this presentation. In order to go into detail about this, especially with the new tax certifications that are being issued, that are currently issued in draft form by the IRS. Again, I'll talk about that a little bit later in the presentation. So you've got to get Forms W-8 from foreign payees that are receiving U.S. source income. You must make sure that the forms that you get are valid, or else it's just kind of like not having a form at all. You want to make sure that the information on your tax certification matches the information that you're collecting in your system to report on Forms 1042-S. So you've got the correct recipient code, you've got the correct address and name, you've got the right treaty claim and treaty information, country of tax residence, things like that. All of those details that are going to need to reconcile with the with the reporting information on the Form 1042-S, because it would be reviewed in an IRS audit. So the IRS issued their Internal Revenue Manual on 1042 and 1042-S audits, and that's one of their first steps is, let me see the Forms 1042-S you issued, let me see your forms, your tax certifications that you've collected, Forms W-8, and let me see the payment records. So they're going to look right away at the forms that you have, and any kind of reduction in the 30% withholding, they're going to make sure that you've got a valid treaty claim or a valid exemption that you've received. And your income codes and things like that match what was submitted on the form. Whether you get a BEN, a W-8 ECI, or EXP, all of that it's really important to make sure you've got a good, solid document due diligence process in place for your foreign payees. So like I said, we could talk all day about that, but our topic today is the Form 1042-S. So let's move on to income code. You must complete an income code in box 1. So whereas when you're reporting on a Form 1099, you've got the INT, you've got the DIV, you've got the NIF, and on each of those forms, you've got some different boxes to report different types of those incomes. But on a Form 1042-S, that's where all of the income paid to foreign persons is reported, for the most part. So you must distinguish the income type that you're paying in box 1, and there's different types of income codes, all different types of income codes on the Form 1042-S, and they must be a 2-digit number, and it cannot be 00. So in the instructions to the Form 1042-S in Pub 515, they'll define the different income codes that you're given, and in their standardized mechanical review of these forms, they should be checking that certain income types can only be paid to certain entity types. So for example, there are certain income types that should only be used for individuals, whether it's recipient code 01 or 09. And they should reconcile whether the income code matches the recipient code. So there's the income codes that would only be used for individuals would be scholarship or fellowship grants, compensation for independent or dependent personal services, compensation for teaching, studying, and training, and earnings as an artist or an athlete. So if you are making this type of payment to somebody that's not an individual, so if you're making a payment to a company and they're giving you services, you're not reporting it as independent personal services or dependent personal services. you can only pay them to a company or to a person, you would report them generally under other income, which is income code 50, which could mean a lot of things. But as long as you're substantiating what you're paying, making sure you've got the correct treaty rate, that's the code that you would use, income code 50. All right, tax rate versus exemption code. This can be a tricky one and it throws a lot of people off, but it is a rule and it's very clearly listed in the instructions, so we'll go over it here. Either the tax rate or the exemption code will always be 00. Unless, even if you're applying a treaty, unless your treaty is getting you down to 0%, you will not demonstrate an exemption code in that box. So if you paid a reduced rate of withholding less than 30, the exemption code is still 00 unless the tax rate is 0%. Only when the tax rate is 0% will you actually have an exemption code. So if you've got a 15% withholding rate, you're not going to tell the IRS that you withheld 15% because they were eligible for a treaty by demonstrating code 04 in that box. You're going to show the exemption code of 00 because 15% is still greater than 0%. And your tax rate is a 4-digit code. So I see a lot of like 30 or 15 in that box, but it is required to be a 4-digit code. I know in electronic filings, these rules are strictly adhered to, but when you're doing the paper filing, they should be as well. Listed here are the options for your 4-digit codes, but mostly people are going to be using 0%, 15%, 30%. And some in-betweens, there may be 10s and 5s and 8s for some royalty payments. But anything outside of the codes listed here should produce an error for you. All right, box 7 and 9 must always be completed. Now this is one that I always have fun with. So the filer has to complete the amount of federal tax withheld and the total withholding credit, even if they are 0. So they can't be left blank. You're going to want to write $0 were withheld if nothing has been withheld. Box 7 is federal tax withheld. It should be the amount of tax that was actually withheld from the payee. So even if you list the tax rate as 15%, the guy got paid the guy was owed $100. If you erroneously over withheld and you haven't paid him that back, this form is his receipt for reclaiming the tax himself with the IRS. So it should actually, if possible, if you can't get him the money back, otherwise, make sure you're reflecting the entire amount of tax withheld in box 7 and box 9. So that guy can use it as a receipt when he goes back to reclaim the money. It could be pointed out as a math error, but the instructions are very clear that the amount actually withheld should be in that box. And again, I haven't seen these notices yet about errors on Form 1042-S, so I can't tell you if that's what they're systematically picking out, but I believe from conversations that I've had that it would be. So requirements for a U.S. taxpayer ID number. I know this can get complicated as well. There's a lot of income types that require a U.S. TIN in order to reduce the rate of withholding from 30% under a tax treaty. In fact, the standard rule is you have to have a TIN in order to reduce the rate from 30%. But the standard rule is, of course, has some exceptions applied. The exceptions are things that would generally be paid by a financial institution. So dividends and interest from publicly traded securities, mutual fund dividends, things like that. If you have an income code that is not 01 or 06, interest or dividends, things like that, you're going to raise a red flag if you've provided a reduced rate of holding, but you haven't provided a U.S. taxpayer ID number. So it's really important to make sure where a taxpayer ID number is required, it's obtained. Taxpayer ID numbers are not too difficult to get for foreign companies, but for the EIN, not too difficult to get. You can turn that around fairly quickly. But taxpayer ID numbers for an ITIN, for an individual to get an ITIN, it can be a lengthy and onerous process. So unless somebody is coming to the U.S. to do a lot of work and make a lot of income, they will usually not have a U.S. taxpayer ID number, and you will not have a choice but to withhold 30% from payments that you're making to them. As a side note, payments of effectively connected income. If somebody is giving you a Form W-8 ECI for payments that you're making to them, you will always use Exemption Code 01. And technically, they always require a TIN. However, there's a conflicting presumption rule where there's going to be certain times you would actually presume an account holder to be earning effectively connected income, and you would have to report that without a TIN. So there are situations where certain rules and the regulations conflict with the instructions of the forms, and you will be required to follow the regulations. And then you will get a penalty notice from them, likely, and you will just argue the fact that you were following the presumption rules. And those are kind of some standard issues that we deal with when we do information return reporting. So what if you can't file on time? The IRS is pretty generous with a 30-day extension of time to file the Forms 1042-S. So it really is, over the past several years, the IRS has established this online 8809 to file. So you can file an extension that's just automatic and request 30 days. You don't need a reason to request the first 30 days extension. If you're filling out the paper form 8809, you will see a blank that asks you to provide a reason, but the instructions are clear. Unless it's your second 30-day extension, you don't need to provide that explanation on the 8809. If you file it on paper, it's got to be signed by the filer. But like I said, the system of electronically filing this form using the FIRE system is really streamlined and easy, and you get an automatic acceptance. If you're requesting an extension from more than one filer, you actually must file it online. So I think they're really gearing people towards having the paper form be the exception, not the rule. But if you do need a second extension of greater than 30 days, I'll tell you that you better have a really good reason or you're going to get rejected. So they're very generous with the first 30-day extension, but after that, if you don't have a building on fire or if you don't have a bunch of staff that it's just left you, then you're going to have a problem getting the second 30-day extension granted. So in addition to extending the IRS copies of the Form 1042-S, you're also going to need to send a written request to extend the 1042-S recipient copies. There's not an IRS form for it. You just write a letter to Martinsburg, and you include your name, taxpayer ID number, and address, and say, we need additional time in order to get the information together to send me recipient copies of Forms 1042-S, because there are separate penalties for not filing either of those that can be applied versus just filing with the IRS or filing with the recipients. And I know with the 1099, you file with recipients first, and then you have a pretty generous window to file with the IRS, where recipients will get back to you with the errors that were listed on their forms. But we don't have that kind of window in the world of 1042-S. You file everything on March 15th, and then you may be allowed a 30-day extension for either or both. The recipient copies or the IRS copies. Now, I like to still present this slide as increased penalties, even though it's not really new for 2012. It was all the 2010 forms that were filed in 2011. But it's still kind of shocking, and maybe not everybody knows about this, so I like to keep bringing it up as increased because it's pretty significant increases. And the IRS reserves the right to increase them as they see fit in the future. So per return, if you didn't file a Form 1042-S on time, or if you didn't file a correct Form 1042-S, you would get a maximum $50 standard penalty. So when we did these massive audit projects, and there were, entire divisions of a company who would fail to do the 1042-S reporting on certain types of income, we really focused on cleaning up the documentation to reduce any sort of exposure, and whatever the standard penalty was for failure to report on Forms 1042-S, the $250,000 cap was always like an assurance, like, okay, compared to what we're dealing with, that is peanuts, so let's focus on what we're dealing with. Well, the IRS did a large-scale study from which they found that people are more likely to report their income on their tax return if it was reported to them and the IRS on Forms 1042-S, 1099. So they got a lot more serious about making sure compliance with information reporting was followed, and this is one of the results of that. So if you correct your form within 30 days, the penalty is substantially lower. It's now been raised to $30 from $15. If it was corrected before August 1st, it's still substantially lower than the standard penalty if they find it a year later. Intentional disregard is pretty serious, and that's somewhere you never want to get caught, because if you know that you have a reporting obligation and you do not do the reporting, the penalty is 10% of the gross proceeds. So it's not based on the under withholding, and if you didn't have any withholding, that's fine. This is gross proceeds. So if you had a reportable amount to report to somebody and they didn't even have withholding on it, you can still be liable for 10% of the gross proceeds, or a $250 minimum per form. It's pretty serious, and that's somewhere that you want to avoid at all costs. And there's no cap on that. The caps are the other really big deal that got increased substantially. So, so a $1.5 million cap would be much more serious than the $250,000 old cap. And now we're at our first poll question.
Great, thanks, Jill. As you can see, this is our first poll question, first of 3 that you'll need to answer today if you'd like to get CPE credits for today's event. The first question is, Form 1042-S is an information return that is issued to A, U.S. persons, B, non-U.S. persons, or C, resident aliens. And we'll give you about a minute or so to answer the question, but Jill will be continuing here in about 10 seconds. So we'll just give you a few minutes to answer that.
All right, we're going to focus now on corrections to Forms 1042-S, because this happens a lot. Sometimes you just don't have the information you need to in order to file in a timely manner. You file forms, and then you find out later on that there's incorrect information on that form. So the rule is, because of those standard penalties, that if you correct a form within a certain amount of days, you get a much lower penalty. You want to correct the form as soon as you possibly can when you have the correct information. So when you're e-filing, there's distinctions between how you are going to handle the correction, whether you need to just file an amended return and mark it as amended and send it in and you go along your merry way, or you have to zero out your original file and then issue a new return that it would not demonstrate the fact that it's amended. So Publication 1187 is very helpful for making those determinations, and here are the general rules. If you have a type 1 error, which is an incorrect money amount, you have incorrect codes or check boxes, you've got the wrong payor, that's you, the withholding agent address, or you submitted a form in error, what you do is prepare the return correctly. So, you reported $100 got paid, but actually you paid $1,000. You're going to just mark the amended box and file the form with that correction on it. If the form was submitted in error, so you thought you made a payment of U.S. source income to this person, but you actually did not, you're going to produce the same form, except the payment amount is going to be zeroed out. And you're only going to file one form to correct this type 1 error. Now, the real problems come in when you have an error in recipient TIN, recipient name, or recipient address. So where you're getting the payee information incorrect, you have to go ahead and zero out the original form that you filed and mark that one as amended, and then you issue a brand new 1042-F with the correct information. So, so it's a two-step process for these types of errors because you're really directing the income payment to the correct recipient. And now we'll talk about Form 1042. So Form 1042 is actually a tax return. You have to issue one of these when any payment of U.S. source FDAP income is made to a non-U.S. person. So I'd like to kind of equate it to a Form 945, but it really isn't the same thing because regardless of whether or not you do any withholding, you have to file the 1042. It's essentially a summary of the Forms 1042-S filed, and it's a detailed schedule of withholding liabilities that occurred throughout the year. So, so you're going to tell the IRS that you owed them certain amounts throughout the year, and they're going to reconcile that with your deposits. So, so that's what line 1 through 60 of the 1042 are for. You have amounts listed there that represent weekly accumulated amounts of tax that are required to be deposited with the IRS. So essentially, you're going to take the payments that you made that withholding applied to, sort them by date, and then mark in each of those lines that represent a week of the year how much you owed the IRS during that period, and then they're going to calculate whether or not you deposited on time according to your deposit schedule. One thing you need to be aware of is you should not list your deposits according to that schedule instead of your liabilities, because I think they're getting a little bit wise to that. And before you prepare your 1042, I would say always, always, always request a transcript from the IRS and compare it with your deposit records. So you should have an account where you keep all your withholding in order to deposit it with the IRS, and you're keeping track of the deposits that are made. It's surprising to me how often I find errors in the IRS transcripts that don't match the deposits that were made. So, so it's good to have that beforehand so you can submit your corrections to the IRS before you file your 1042. You want to be proactive there instead of reactive because you really don't want to get a notice and then have to prove then that you actually did deposit at the right time. So deposit requirements. I have clients that for years are doing everything right except for the deposit requirements occasionally do not get adhered to, and so we get penalty notices, which is just a really important component because it's so easy for the IRS to penalize for this, and then the notices are automatic. So beginning in January 1st of 2011, you've all got to use EFTPS to make deposits. You can't use Forms 8109 or 8109B any longer. That's the paper coupons that you write a check with the paper coupon and send it in. So deposits must be made to the following strictly adhered to schedule by quarter monthly period, so essentially by week. Liabilities over $2,000 must be deposited within 3 business days of the end of the period. And the periods end on the 7th, the 15th, the 21st, and the last day of the month. So those are the dates that you need to be aware of each month in order to make this determination. If you've got a liability of more than $200 but less than $2,000, at the end of any month, you're going to make sure you deposit that within 15 business days after the end of the month. And if you don't have much withholding at all, perhaps at the end of the calendar year you have a liability that is less than $200, you would pay the taxes by March 15th of the following year, essentially with your 1042. And the deposit requirements are outlined in the instructions to the Form 1042 in Pub 515. So definitely take a look at those to make sure that your procedures are adhering to those requirements. So we're on refunds and overpayments. It's kind of a sticky situation because the instructions are very clear. You would claim a refund on your Form 1042, but the instructions are clear that the refund must be claimed on a timely filed return. And a lot of times within the regs and form instructions, they use the term timely filed, including extensions, but they don't do that on the 1042. So it's kind of still up in the air whether, well, I would say in my experience, people filing with extensions have still been able to get the refund on their Form 1042. But because the IRS is paying stricter attention to these forms and because it doesn't say that in the extension, I would say that there could be a possibility of not getting your refund back if you do extend the form. So if you have a large extension, I would recommend a large refund coming and you are on the fence about whether or not you should file an extension to your Form 1042. I would say the conservative approach would be to file it sooner than later. There are, like I said, in my experience, plenty of examples of the IRS honoring the refund after the extension is granted, but I can't guarantee that that will happen just because of the wording in the instructions. But I can tell you, in my experience, that there are many times where refunds are not provided on an amended return, and that specifically states this. So if you have a form, that you need to file, and you filed your 1042, and then you realize you did some under withholding, or some over withholding, you can't file an amended return and reclaim that back. So the IRS's concern is that you've already filed the 1042-F forms to your payees saying, you know, we withheld 30%, and then you realize later, and you demonstrate on this form there was $300 of withholding. And then you realize later, well, that was over withholding. They had a treaty. They should have just been withheld at 15%. So let's go ahead and give them back the money and reissue them an amended form 1042-S that demonstrates the $15 withholding. So we'll give them back the other 15. Well, the IRS is afraid that the payee would go ahead and use that original form 1042-S and file it with the IRS saying they paid $30 or $300, and they'd get the refund from you, and they'd get the refund from the IRS. So that's why they don't allow refunds on amended returns. Now, if over withholding is discovered after returns are filed, you would have the payee themselves just go ahead and use the 1042-S to file a U.S. tax return to reclaim the over withheld amount. So we actually get a lot of calls from our clients that say, hey, I over withheld on this person. It was totally my fault. They submitted the right form. I didn't apply the rate. We'll pay you to help them get the refund back. Because it's the U.S. tax system and returns, and people have a difficult time navigating that system by themselves. All right, on to 2012 updates. So what's new for 2012 1042-S reporting? There's a handful of different things that have happened this year that we're kind of really bracing ourselves for the big changes that are going to result from the FATCA regulations being finalized in the next couple of months. So outside of that, the new issues for 2012 are Section 871M, dividend equivalent reporting. So there's new treatment for withholding and a new income code on the Form 1042-S, making sure that these are reported as, these distributions are treated as dividends and withheld as dividends, but there is a new Form 1042-S code. So in your systems, if you're coding for payments of the 871M distributions, you can essentially map them to the dividend withholding rates, but you are going to need to create a new income code in order to report them on the 1042-S. Another issue is payments to artists and athletes. So now they have their own income codes in addition to their own recipient codes, which will trump the, reporting them as income or recipient code 01 individuals. They would be reported as 09 artists and athletes. And the income code is going to vary, whether it's 42 or 43, depending on whether there's a central withholding agreement with the IRS in place. So if they've filed the withholding agreement, you're going to report them under 43, but if they've not, you'll report them under 42, and they're going to provide that information to you up front. and if they should provide it. I guess I can't guarantee that they will. You should collect that information from them up front. So interest paid on foreign targeted bearer obligations are no longer going to qualify as portfolio interest. These are obligations issued after March 18th of 2012. So like I said, there's a small handful of issues that you need to be aware of for the 2012 reporting, but there's a lot more coming up due to the FATCA regulations. So whether you're a financial institution or you're looking at Form 1042-S reporting in the scope of just for individuals or just for vendor payments, where there might be some exceptions from the basic FATCA issues, you're going to have to deal with the new Forms W-8. So a couple months ago, the IRS issued draft forms. I think they're dated May 31st. Draft Forms W-8, and there's 2 forms now for the W-8. So the W-8 then would generally say, hi, I'm the beneficial owner of the income, here's my name, here's my address, here's a treaty claim if I'm eligible to make one, signed and dated, and we're good. Now, in the new forms that were issued in draft form by the IRS, there are 2 of those forms to make up for what was the old 1 Form W-8 then. The first one is only to be completed by individuals. So it's actually simplified, which is better. It's still 1 page. It only asks for certifications relevant to individuals. So it doesn't ask for the country of organization or incorporation. It doesn't ask the more complicated treaty certifications. It's really simple in the treaty claim section, but it will actually require a foreign taxpayer ID number. So if you're dealing with a Canadian, their social insurance number, whoever you're dealing with, the IRS has compiled lists of different types of tax ID numbers across the globe, and they'll be expecting those individuals to enter those into their Form W-8 then. One form is going to be used only by non-individuals, and this is the W-8 then E. If you haven't seen it yet, it's kind of a big nightmare. So the draft form is 6 pages long, and it's kind of like an IMY style interview of you're still entering your name, address, country of organization, what type of entity you are, and in this case, the additional portion of information that you're going to need to have your payees provide is their Chapter 4 status. So status is defined under FATCA, which I'm going to get to in the next slide, and additional certifications as per whichever Chapter 4 status they've chosen. And that's why it's 6 pages long. It's not 6 pages of information that any one entity would ever have to fill out, but it is still quite complicated to navigate. And it will also require a foreign taxpayer ID number. So just for a glimpse at this form, there's a new line 4 of the W-8 then E. So it's going to give you the Chapter 4 status. And so for so in the scope of vendor payments, this can be not so challenging because you're definitely going to be paying people who are active NFFEs, and an NFFE is a non-financial foreign entity. So it's not a bank, not a brokerage, not an investment organization, not a retirement plan. It's somebody who actively is engaged in a trade or business. So, so for vendor payments, you would have your payees complete that box. But if you're not in vendor payments in your financial services, surely FATCA has been on your radar because it will change a lot of things, and people will have to certify their Chapter 4 status, and then they might have to provide some additional documentation on their underlying owners to confirm there aren't any U.S. persons who are their underlying owners. So the due diligence for these forms is going to get a lot more complicated. So now we have our second poll question, and I'll turn it over to Lauren.
Great, thanks, Jill. So in 2012, what professions have their own income code for 1042-S reporting? Artists and athletes, IT professionals and consultants, or bankers and financiers? I'll give you just a minute to answer that question, and Jill will continue.
All right, moving right along to what I think is our last slide. So the FATCA impact on 1042-S reporting. Oh, and I don't think I've defined FATCA. It's the Foreign Account Tax Compliance Act. And the objective is for the IRS to find U.S. persons who are essentially hiding behind foreign entities in order to make investments in U.S. income. And so we're requiring a lot more information from those foreign entities in order to substantiate that they don't have any U.S. Owners and all their owners are foreign or exempted from this crazy process. So luckily, we were very happy to find in the draft FATCA regulations that payments made in the ordinary course of business are exempted from this process. And that's why we have the designation of an active non-financial foreign entity, because it is not a target of the IRS. They think that people who have their money overseas and are tax evaders are not necessarily doing it through a trade or business, they're doing it through passive investments. So, active NFFEs have an exception here. Unfortunately, the new tax forms and 1042-S reporting requirements are going to affect everybody that makes payments to foreign persons. So even if you're only doing 1042-S reporting in regards to vendor payments, your life's going to get more complicated just by collecting and making sure you're doing the due diligence on these new tax forms. And additional things like making sure the foreign taxpayer ID number it's going to be required on the VEN, so ultimately it's also going to be required to be issued on the Forms 1042-S. The FATCA status that they certify on the form is going to have to be required to be reported on the 1042-S, and there should be some separate FATCA withholding that's also applied outside of the vendor payments world. So, and if you haven't collected the certifications, then you could fall under that as well. So there's a lot coming down the stream as we're thinking about 1042-S reporting, and ultimately this kind of has, the reporting requirements would be a couple years out, because we expect over the next couple years, we expect the new Forms W-8 to be issued by the IRS by the end of the year. The old forms would have a 3-month or a 6-month sunset period. So if you're collecting the current Forms W-8 BEN, you would still have 6 months to get a new current Form W-8 BEN. You would have to get a new Form W-8 BEN that is the old version, and then you have to start collecting what is probably going to be October through December 2012 version of the new tax forms. And once the new tax forms are required, the new information is going to be required to be reported on the 1042-S. So just a note to have a heads up for those forms when they're finally issued, and making sure that 6 months after they're issued, you're only collecting those forms. Once your old forms expire, you don't have to go resolicit your whole population today, but once your old forms expire, you need to collect the new forms. And the old forms won't be able to rely on the if you've got a name-PIN combination that you're reporting, you can extend the validity of the old forms. You will need to get these new forms once they're expired, because you'll be required to collect the new certifications. So that will certainly complicate things. And I'll turn it over to Lauren for the last poll question.
Great, thank you, Jill. Our final poll question is, once FATCA regulations are finalized, Form 1042-S are not expected to change. True or false? We'll give you a couple of seconds to answer that poll question. And then we're going to jump into our Q&A, so we'll be right with you. Okay, we're going to move on to our Q&A session with Jill and Jeff Cronin as well from Convey. Jill, our first question is, will the new W-8 BEN for individuals replace the Form 8233?
Oh, I was hoping that that answer would be yes, an immediate yes. But unfortunately, the new Form W-8 for individuals still refers to completing the 8233 if there's the payment of personal services provided in the U.S. that you're claiming a treaty claim on. So the immediate answer is no. I'm really bummed out about that, as I'm sure you are, but we're hoping within the next couple of years they will make that change and they will start allowing the W-8 then individual to replace the 8233, the dreaded 8233.
Sounds good. Thank you. Next question. Should information that's typically reported on a 1099 int be reported on a 1042-S now? And is there a specific income code?
So if, I think is the question, if you're reporting a U.S. person on a 1099 int, would that income, when reported to a foreign person, be reported on the 1042-S?
I believe so, yes.
Okay, so the general income code for interest on the Form 1042-S is 01, but there are some different variations on that income code, whether it's interest paid on real property mortgages, interest paid to controlling foreign corporations, deposit interest, or OID. So the general interest income code is 01. Yes, it would be reported on the 1042-S, but you do want to go into the instructions of the 1042-S to see the different range of income codes that could possibly be.
Great, thank you. A couple more questions. I just want to acknowledge that we have received a lot of questions today. So we have kept record of all of them. We're going to get to as many as we can, but we do want to be respectful of people's time today. So a couple more questions for Jill. Does the W-8 need to be an original copy, or can it be a faxed or email copy?
Okay, this is a great question. It's also going to be affected by FATCA. So currently, any Form W-8 that you receive from a direct donor has to be an original wet ink signature, unless you've gone the form through the process of getting a memorandum of understanding with the IRS for an approved electronic certification system. But the general answer is yes. Paper forms that you receive must have the wet ink signature. It must be original. However, the FATCA regulations that are still important to remember just in draft form say that if you can verify that the form was received from the beneficial owner of the income, you can take a fax or a scan or a copy of that form. So we envision some sort of authentication process where somebody might fax you a form and on the cover sheet say, hi, this is Jill Dymtrow, the beneficial owner of the income, or, Jill Dymtrow, the president of XYZ Enterprises. I'm sending you this form. Please know that it's come directly from me or something. So if there's some sort of authentication process where you can determine that the form was actually received from the beneficial owner of the income, then you will be able to accept it once the FATCA regs get finalized in fax or copy or scanned form. So that's actually some really great news that we did get from the FATCA regulations. But don't follow it yet because they're still in draft form.
Sounds good. Last question, how is the Canadian T4 different or the same as the 1042-S?
Well, the T4 is going to have the same kind of objectives of making sure income is reported. So the name and address and taxpayer ID number of the recipient of the income and describing what type of income. So it's kind of the same concept, but I'll have to say I haven't worked with the T4. That's for anybody who doesn't know, that's the Canadian Canadian equivalent of the Form 1042-S, and I haven't worked with them in a handful of years, so I can't tell you the specifics of how the forms might have changed in the last couple of years and any differences, any more specific differences than that. But conceptually, it's the same idea. It's the receipt that's issued to the payee for the income that was earned that would then evidence the income on the tax return, making sure all of the income that was earned is reported, and any withholding that was taken, that the IRS would have evidence of the withholding. The payee would have a receipt for this withholding, and they can claim that against any tax due on their tax return.
Great. Thank you very much, Jill. Another very frequently asked question is, will this presentation be available via recording, and will we get the slides? The answer to both of those questions is yes. I'll be sending out an email early next week. And I do want to acknowledge that we have launched a final poll question. We want to make sure that if you want CPE credits, that you receive them. So if you take just a moment to answer yes or no, or if you don't answer, we're going to assume no. Just let us know what you'd like. And then before we go, I'm going to hand it over to Jeff Cronin, Vice President of Product Strategy at Convey.
Hello, everyone. I'd like to thank Jill for coming in, doing a presentation today on the subject. It's nice to be in a position where we can actually bring experts to the table and let everyone know what's going on around especially complex and really often misunderstood areas like 1042-S reporting. So, Jill, thank you for joining us. And I want you all to know that Convey will be running this series actually throughout the year, and we urge you to continue to come. We want to be not just a provider of tax reporting solutions for the marketplace, but also to provide access to information and education on an ongoing basis. In relation to that, obviously we have our 1099 News blog where we can continually put out updates on 1099 related issues and 1042 related issues. There's our Twitter feed if you would follow us on Twitter at Convey 1099. And we have a LinkedIn group for communication and conversation on 1099 related issues. Just search for Convey Compliance on LinkedIn.
Great. Thank you, Jeff. And again, a big thank you to Jill for joining us, and thank you to our attendees for joining us for today's session. That concludes our webinar, and I hope the rest of you have a great afternoon.